goods. Welcome to Market Overtime here on Schwab Network. You, the audience member, made the choice to tune in. The decision to stream this episode came from your own thoughts and reasoning within your brain. And that's the psychological space that we'd like to explore further today. Joining us to help navigate it all is Denise Shull, the author of Market Mind Games, A Radical Psychology of Investing, Trading, and Risk, and the CEO of Rethink Group. Denise, thanks so much for joining us.
Oh, thanks for having me, Caroline.
So we're veering off the traditional investing talk and we're going to add science into it. But before we get to all of that, I'd love to give you the opportunity to just tell us a little bit about yourself, because you have such an interesting background with a master's in neuroscience. You were a former trader, you managed trade desks, you are a performance coach for hedge funds and professional athletes. So I'm curious about how and why you decided to kind of mesh science and psychology with decision-making and investing.
Yeah, I actually started out in the business world working for IBM, and I was supposed to go to Stanford Business School, and I thought, oh my gosh, if I have to care if anyone buys a computer, I'm going to have to, whatever, like that's not going to work. So I managed to get myself into this master's program that's technically neuropsychoanalysis, and all that means is like we have an unconscious, and how does that work? And then after being planned my life, I took a left turn in Chicago with a friend of mine who was a floor trader. And then next thing I knew, I was in an upstairs trading firm and I was not getting a PhD. And so I fell in love with, it was day trading equities at the time. It was actually 30 years ago. I started in August of 94. And everyone was like, you did that expensive master's degree. And I'm like, I don't know what to say. Then I was invited to move to New York, run some trading desks, and I enrolled in a little institute, and they wanted to publish my master's thesis. This is 2003. And I basically discovered that the neuroscience was showing you have to have emotion to make a decision. And I was like, that changes everything. And basically, I just started talking about it, and people started asking me to talk about it more. So I started doing more research, and it took on this life of its own, related to the reality of how we perceive anything, but particularly how we perceive risk in markets. And the more I talked about it, the more people were interested. And here we are.
And here we are. And it's interesting because you're saying you have to have emotion in order to make decisions. Yet all too often when it comes to investing, one of the top pieces of advice is take emotion out of it. So why the disconnect, and was it as surprising to you as it might be for someone like me to hear that?
Well, at first it really was. That's why I was like, wait, we've got this all wrong. I mean, I think it's like when we thought the earth was flat and then found out it was wrong. It looks like you should take the emotion out of it, but it's really that you need to control your action. And it's actually easier to control your action if you understand the emotion, such as it's easier to sail around the world once you understand it's round instead of flat. And so at a very core, it's like you have to have confidence that you're making a decision that's going to, as time evolves, it's going to work out the way that you want it to, or that's the core. I mean, people make decisions out of fear and frustration and other things, but it was a fundamental confusing of emotion and action. Like feeling and emotion actually has information for you. It has information about yourself and things outside of the trade, and that's the skill. Like knowing, is this feeling about what's going to happen to me, or is this feeling about what I think the market is doing? But it's using that as a data set and controlling your actions. But it looks like if you controlled your emotion, you could control your actions. Like it looks like the ocean is flat, but it's not really.
So I'm curious about what you're setting out to do, or you've been setting out to do with the Rethink Group, because I know that you're focused on helping others rethink their decision making, and it sounds like you want them to add emotion back in. But what is the ultimate goal with the people that you work with?
Well, I want them, as I use this word with them all the time, have an accurate perception of what they think and why they're doing what they're doing, which includes the accurate view of what's the role of what they're feeling. In practicality, what that does in the short term is help them avoid acting out their feelings. Because what happens when you try to control the emotion, eventually your behavior displays the emotion. You try to say you're not afraid, and then you do the thing that like you're afraid of, or you don't do the thing you're afraid of. So I'm trying to help people understand themselves better. And in doing so, ultimately, I mean, this sounds grandiose, but it's true. Like in my mind, suffer less out of misunderstanding how their thinking and feeling work together. Now, so when I very first started consulting, like even though it was very trading related, I said my objective was to change the world's view of emotion. And then when it's all said and done, that's still my objective, like change the world's view of emotion. It just has these practical effects where you don't act out as much, you learn to understand yourself differently, and generally less critically because like your model is right. Like yesterday, I posted on Twitter that everything I looked at yesterday morning on LinkedIn was stop lying to yourself, be more disciplined. And I'm like, that doesn't help anybody. Generally speaking, everyone's self critical enough. What they need is a more gentle, accurate understanding of like why they're doing what they're doing. And when they get that, their chances of doing what they want to do improve as opposed to that you're doing it wrong. So,
What's the most common emotion you help traders or others in the investment community try to understand? Is it fear? Is it anxiety? Is it fear of missing out? What is it?
I think, this changes like sort of depending on who my client base is right at the moment. But I think it's generally fear of missing out or what they perceive as fear of missing out, what they experience. So, like you're in a trade, it's not working. Your intuition, which is a valid form of knowledge, tells you, okay, you were wrong, you should get out. But that the other part of you argues with, I don't want to get out and then have it work. And then I'll be mad at myself. I'll feel like an idiot, which it ends up not being the missing of the money you could make. It ends up being how you will feel about missing the money if you got out, which is really fear of future regrets. And once people like realize that they are predicting regret, some form of regret, and the regret is actually usually personal, like I feel stupid or I'll look stupid or I'll be embarrassed, they don't realize they're trying to prevent that prediction about themselves. And that looks like fear of missing out. But once they, like, let's say, look the fear of embarrassment in the eye, it loses the control that it otherwise has when you don't know you have it. And I think I've said for a long time that if people don't do anything else with my work, realize that what seems like missing out is really some other thing related to regret, related to yourself. And if you're able to make that conscious, chances are you won't act on it, or you lower the chances that you act on it, which then causes you to make more better decisions, and then you try to build on that.
And how do you actually make that conscious other than setting up a one-on-one with you?
I have all kinds of people like on Twitter who tell me that, I mean, forgive me for the grandiosity of this, but tell me I've changed their lives through my Twitter. Like this is where you do use your intellect. Like you use your intellect to be introspective, to say, what's happening to me? Like, what am I subjectively experiencing? And, literally at this point, thousands of people relate to this. Wait a minute, it's not missing the making the money. It's how I will feel about it if I miss making the money. And then they tend to go, oh, well, my worry about being embarrassed shouldn't control what I do because it doesn't have anything to do with what, NVIDIA is doing. And once they spend the time being introspective, really listening to, I tell people, if nothing else, it's all summarized in answering what am I feeling and why am I feeling it accurately. It's an easy question to ask. It's harder to answer than it seems, but it's doable. And because you're actually working with yourself, the way the human mind really works, there's kind of a lack of friction once you decide you're willing to do it.
It's difficult with investing though, because it's you win or you don't, right? Stocks are up or they're down. So does this just alleviate the pressure if you end up losing money? Or I guess, how do you shake that pressure of always trying to win?
Well, that's a really good question. I mean, the real problem is actually not are they just up or down, but it's like a tick by tick assault on the ego. So if it ticks in your direction, you feel better. If it ticks against you, it feels worse. And of course, you're generally not in it for one tick, right? You're in it for like a day's or a week's or a month's or a year's worth of ticks, like a direction. But every one tends to, I mean, I was on the phone with a professional trader yesterday who doesn't need any more money. Like he's 38, he could retire today with no problem. But we were talking literally about this. He trades in the energy markets. It's like he's like, how do I stop overreacting to every tick? Well, we went through what he's predicting. And in his case, there was a lot of pressure in his family to be perfect. And he feels a disproportionate amount of anxiety when something ticks against him. But it's a lesson he learned that he had to bring home A's, that he had to get the best behavior grades as, a 10-year-old. His parents, infused into him the idea that if he wasn't perfect, something really bad was going to happen. So we ended up talking about like what in his imagination. Like I will often say to people, okay, so then what happens? And they'll go like, and then they'll say, okay, I'll be embarrassed. And then, okay, so what if you're embarrassed? And they'll be like, they've never thought about the fact that they have this storyline that's going to play out. And when they become conscious of it, it just loses its influence.
I'm curious about what a one-on-one session actually looks like with you. Is it essentially a therapy session?
It has its moments where it certainly would sound like a therapy session. So like if I get a new client, my first objective is to like listen to them talk about themselves, how they got to where they are, so that I can feel what it feels like to be them. I want to like understand, how does this person experience anxiety and fear? What does confidence mean to them? What triggers them, so to speak? And then I adjust what I do. I mean, I'm always trying to help someone know what they're feeling and why. But I adjust how I do it depending on how much they already know about how they feel. Now, I also know that like human development is that we develop an idea of who we are, when we're under 10 years old, and an idea of like how we should operate in the world when we're under 10 years old. I mean, real psychologists will say under 5, but I know that the human brain predicts based on past experience. And so the most important past experience about who we are and how to react, particularly when we're faced with a risk, is what we learned about ourselves in grade school or younger. And so I'm often helping people see that like their dad was super critical, so the market feels more critical than it even is. Or like in the case of this client last night, I mean, he could lose tens of millions of dollars. It would make no difference to him. But it feels to him in the moment, like he even said last night, like I'm going to die. And then he started laughing. And I find that's true when people are able to do, and then what? And bring what's in their unconscious to their conscious, they get to the point where they realize it's funny. Like it's not true.
So how does all of that translate into better decision making? They become less reactive?
Well, I think it goes like this. Generally speaking, as people start to understand what's really causing them to make a pattern, people make patterns. They get in too early, get out too early, don't get big enough, get too big. Like you find out a person's pattern. But as they start to understand these unconscious predictions about what it's going to mean to them, they're able to make fewer of their worst decisions. So I always tell people, what happens if we cut out the bottom 10% of last year's decisions? Like how would your P&L look different? So I try to attack that first, like to figure out what their pattern is that gets in their way. A lot of the professionals, I will tell you, they either like they hire me. I mean, they will like some of them will have a big drawdown and then they want to recover. But like overall, they'll call me up and say, I want to use my intuition. I know I have it and I want to learn to use it better. But again, that's sorting out what they're feeling so they can hear their pattern recognition feelings. But in practicality, it's like, let's cut out your worst decisions. And as you do that, like you have more mental capital, right? You're more motivated. You have less periods of being overly frustrated. You also like have more money. You don't lose the money of the worst decisions. But almost more importantly than not losing the money of the worst decisions, you you like don't beat yourself up as much. And so you're
Mm-hmm.
more available to the next trade. And the next trade isn't just in reaction to what went wrong or right in the last trade.
But it's such a fast-paced environment. So is this literally an issue where you might just take a few beats and do some breath work? Is it they call you quickly in between making these decisions? I'm just trying to get more of a sense of the workflow of how they're actually utilizing this advice.
So I have clients that are trading / investing on all different time frames. Most of them, because they're professionals, are not trading and investing for the next hour. I mean, sometimes they are, they're positioned for, non-farm payrolls or CPI, but generally their time frame generally is somewhere between days to months. I mean, I do have long only clients who are in stocks for years. I start out talking to someone twice a week because, to your point, because they make so many decisions in a week.
Mm-hmm.
And I give them, based on what I hear, like how much do they know what they're feeling and why, I give them homework. And I tell people they can text me or email me anytime. Not that many people do. I mean, some clients will text me a lot. And then once we get through the sort of who are you, how much do you know about yourself, how much intuition do you have, how do you access it? In practicality, with my hedge fund clients, I end up talking to them about their positions. Like they will talk through with me a trade and why they think it's going to work. And I'm listening for, do they really believe themselves? Are they rationalizing? Do they just want it to work?
Mm-hmm.
Do they want it to look smart? Like I'm taking what feelings they're giving me and then asking questions to help them clarify, like, do they really believe in this? What are they conflicted about? And then that leads to how big they should be in the trade, or sometimes that they should get out.
Right. You mentioned homework. What's the homework look like?
Well, one thing I'll give you, like something people pay me for, is like write down every feeling and emotion that you can think of related to trading or investing. I mean, to me, trading and investing are the same. It's just because the brain making a market decision is doing it in a certain way, whether it's for the next 5 minutes or the next 5 years. And so there's not, other than if it's for the next 5 years, you have a lot more time that you have to deal with in terms of how you feel. The mechanisms are the same. So what the research shows is the more you know what you feel, the more money. Hence, the control your emotions is just not helpful.
But if the goal is to rethink, Denise, I'm curious, does overthinking complicate things? Because I know I can suffer from analysis paralysis and overthink too much. So how at risk are you of overthinking as you're rethinking?
Well, people generally overthink because they're trying to assuage a feeling they're not admitting to. Like the overthinking is there's some discomfort or anxiety, and like you're really trying to like mitigate that. So if instead of overthinking it, you go, okay, what am I really concerned about or worried about or nervous about? And you're honest with yourself, you're usually able to find the truth. I mean, some of it's unconscious and sometimes it's it doesn't happen just like that. But oftentimes you're able to find the truth. And then the thing that's actually really bothering you. And then you're able to say, okay, I'm worried I'm going to lose money. Okay, well, what happens if you lose money? Well, in some cases, like with my clients, nothing, like literally nothing. And then I go, okay, so I'm not really worried about losing money. I'm really worried about my boss going to think I'm stupid, or I proposed this idea to the whole firm, or I was on television and I said this was my number one pick or whatever, and then I'm going to look dumb. Like, and then you realize the thing that's really bothering you. And there's this magic of finding the thing that's really bothering you that tends to make it not bother you or bother you a whole lot less.
So we're almost out of time, and I want to give you a chance to really just drive home the most important lesson for someone who maybe hasn't taken time to really feel their feelings or access emotion, who's been trying to push it aside. Just for people in the investment community, what's the most important advice you think you should leave them with?
Your feelings and emotions seem scary. Like, they seem like you'll start to feel them and you'll drown in them, or you'll start to feel them and you'll just act them out, and you'll do stupid things trading, or you'll do unhelpful things with your family. It's actually not true. At their core, they are meant to help you. Now, chances are yours and all of ours are distorted and exaggerated because of our life experience. But they give you important meaning, and you deciding that you're going to respect them and understand them is you validating yourself. Like, who cares what anybody else thinks? And you start to be able to be more of your best self if you stop cutting off this core part of you. And the net is, if you can feel as much as you want to feel. I'll just say this really quick. When I first started trading, 1994, in an office in Chicago, like, the most emotional guy in the office was making the most money. And I was reading all this trading psychology, control your emotions. And Steve's over here jumping up and down and screaming and swearing and like printing money. And everybody else was, not printing as much. And I was like, why? Steve was like accessing and expressing his emotion and choosing his action, as opposed to the energy of the feeling getting infused into the action. So what am I feeling and why? At its core, it's meant to help you.
So many interesting insights to leave us with. Thank you so much, Denise Shull, CEO of Rethink Group, author of Market Mind Games, A Radical Psychology of Investing, Trading, and Risk. Really appreciate it.
Thanks for having me.
That's all for this edition of Market Overtime. If you liked what you saw and heard, be sure to subscribe to Schwab Network's YouTube page and find all of our past Market Overtime episodes there. I'm Caroline Woods. Thanks so much for watching.